We've had some very exceptional trading days recently, and that's perhaps an understatement. And I suspect more will come soon enough. But while all this selling is going on, there is another side. Someone must be buying, and it's not just me. One of those buying is billionaire investor Carl Icahn. With a net worth of about $15 billion, Icahn is known as a successful stock picker. Although he is known for other reasons, we'll just focus on his recent buying. Icahn has noted that stocks haven't hit bottom yet, but he argues that the recent market weakness presents investors with unique buying opportunities. He recently stated that it's reached a point that there are some companies that are sort of just given away. Some of these companies are awfully cheap. They're very cheap. Icahn further stated that he's been bearish on stocks for quite some time and expects to see stocks sell, but he is not quite as bearish as he was in the past. So let's take a look. And one of the stocks Icahn has been buying is Newell Brands. Newell Brands, the symbol NWL, is one of the top consumer goods companies. Some of Newell's holdings include Sharpie, Coleman, Rubbermaid, and Crock-Pot, just to name a few. Despite the fall in Newell's stock price, or perhaps because of it, Icahn has been buying. Between March 9th and March 11th, the billionaire pulled the trigger on 2,585,201 shares, making him a 10.7% owner of the company. The purchases were made at an average price of $13.41 per share, with a total purchase value of about $34.7 million. SunTrust Robinson analyst Bill Chappell noted that Newell has placed several new hires. Chappell further stated that past management teams have erred in trying to centrally operate the businesses versus relying on managements who fully understand their particular business. Management has stated that in the long run, it will place a significant focus on achieving core sales growth, operating margin improvements, and 100% plus free cash flow conversion. According to Chappelle, the company should finally be done with major restructuring. And as the free cash flow opportunity is better understood by the street, he believes the stock multiple should expand. Currently, the dividend yield is about 8%. Chappelle has a buy recommendation with a $25 per share price target. So, let's take a look at our charts. And we're looking at the 20-year monthly chart on Newell Brands, and the symbol is NWL. For disclosure purposes, I do not own any shares of Newell Brands at this time. From the price chart, we can see that the bottom in 2009 was there. Since then, given the recent sell-off, the stock hasn't made much room. Now, back here, though, all the way up through to mid-2017, it was on a pretty good trajectory. But again, with corporate problems, the stock sold off down to this bottom here, had the bounce up to about $20 a share, and then with the recent coronavirus, it sold off to this current price there, $12.28. Moving down into the MAC, we can see the reasonable bottoming process at that point there, the run up, and then of course the sell-off during the coronavirus. Now, it is improving, but wait for that sell-off to terminate and watch that fest line perhaps close through the slow line, but then once again bottom before hopefully turning back up again. In the MAC histogram, you can see very negative all the way down to that point there in early 2018, but the rebound has been very good up until the last few weeks. Into the price rate of change, you can see the same thing. Nice bottom, nice move, but a hard sell-off. Into the relative strength index, much the same there. You can see that also in the stochastics. The volume, interestingly enough, has been declining and really hasn't picked up much in the sell-off, and that's a good sign, at least in my opinion. Moving down here into the Williams, again, same thing, nice bottoming there through 2018 into 2019, and this most recent sell-off coming back down here, but it's still at a reasonable 89.52 or negative 89.52, where other stocks have hit that maximum negative 100 level. But we'd want to see the Williams head back on up out of that oversold territory, and hopefully that won't take too long. Back up to the price chart. One last look again. You have that hitch here, which is that sell-off down to this point here, and if you can, just wait for that bottoming process, wait for the volume to dry up, and wait for that price to settle out in this area, hopefully above the price of $10 a share. If so, Newell Brands may be a candidate. And for today, that's ChewDog Charts. Thank you.